All right, let's kick off today's deep dive. We're taking a close look at the Q2 FY25 performance of Hindustan Foods Ltd,
Mm-hmm.
an Indian contract manufacturer. And I know you want the rundown fast.
Yeah.
We've got their financials and earnings presentation right here.
Good.
But right off the bat, one thing kind of jumps out at me.
What's that?
This company's portfolio. They're doing so much more than I expected. We're talking everything from ice cream and beverages, even to footwear.
Oh, wow. That is interesting. It's actually worth noting they've been recognized as a 2-star export house by the Indian government, so that shows they're pretty established.
That's a good point. So they're definitely a big player. But how are they actually doing? The earnings presentation shows their revenue in the first half of fiscal year 25 jumped 35% year over year,
Wow.
reaching a total of Rs 1,757 crore.
Okay, and what about their EBITDA?
EBITDA also saw a good increase, rising 39% to Rs 148 crore.
So those are some pretty impressive numbers. Revenue growth like that could mean they're grabbing more market share. Or maybe they've got some really successful new products out there.
Yeah, no doubt.
And the growth in EBITDA, which is earnings before interest, taxes, depreciation, and amortization, shows they're managing costs well even while they're growing.
That's true, but there's this one thing that doesn't quite add up to me.
Okay.
Their profit after tax, or Pante.
Yeah.
It only went up by 4%, reaching Rs 50 crore.
Yeah.
And that just seems out of place when you see how well their revenue and EBITDA are performing. So what's going on there?
Yeah, that is a bit of a head scratcher. Let me see. Looks like the earnings presentation mentions integration costs tied to their move into the shoe business as one of the things affecting their profitability. Remember, they recently acquired those 2 manufacturing facilities from SIPL,
Right.
and it looks like they're really pushing to break into this new market.
It's true. They're on a pretty aggressive expansion kick right now, not just with footwear,
Yeah.
but also beverages and even color cosmetics. I mean, they even went and bought a bottled water company. It's like they're building a whole empire. But is that a good thing? Are they spreading themselves too thin?
Well, that's the question, isn't it? It definitely seems like Hindustan Foods is going for a diversification strategy. Maybe they want to reduce their dependence on any one particular market and tap into these new growth opportunities at the same time.
Okay, so instead of putting all their eggs in one basket, they're going for a whole bunch of different baskets. Makes sense. But how are these new ventures actually performing?
Well, according to the presentation, their shoe manufacturing segment and their OTC and wellness product factory in Batty are doing really well. Those are probably some of the big reasons behind that impressive revenue growth we saw.
Okay, so they're seeing some wins, but let's circle back to that profitability puzzle for a second.
Sure.
Anything else besides those shoe integration costs that's affecting their bottom line?
Well, keep in mind that any new project often takes a while to actually turn a profit. There's usually that initial period where you're investing a lot, but you don't see the returns right away. That's why their cash flow statement is pretty interesting. Even with investments in working capital, their operating cash flow has gone up significantly.
So even though they're spending a lot, the cash is still coming in.
Exactly. And that shows their core business is healthy and generating enough cash to back these ambitious expansion plans.
Okay, that's good to hear. But what's the company's leadership saying about all of this?
Well, during the earnings call, the managing director, Samir Arkathari, seemed pretty confident about their long-term prospects and future profitability.
Oh,
Yeah. He basically views this dip in Patty as a short-term cost of going after these big growth opportunities. He even said he expects their gross block, basically the value of their plants and machinery and things like that, to hit over Rs of 1,800 crores by FY26. And that shows they're really committed to expanding.
okay, so they're feeling good about the future and they've got the money to back it up. But are they taking on too much with this diversification?
Well, that's where things get interesting. Hindustan Foods is trying to walk that tightrope between growing aggressively and staying profitable.
Exactly. And diversifying across all these different sectors does make them more resilient in a way. Like you said, they're not putting all their eggs in one basket. But at the same time, could expanding so quickly into so many new areas be risky? I mean, how can they make sure they don't lose their focus?
It's a good question. Taking on too much at once can lead to problems with managing everything, challenges integrating the new businesses, and ultimately hurt their profits. To really get their strategy, we have to look at what's going on in India right now.
Okay, what's happening in India that we need to know about?
Well, India's economy is growing really fast right now, and that's created this huge new middle class with more money to spend. That means more demand for all sorts of things: packaged foods and beverages, personal care products, footwear, you name it.
So Hindustan Foods is positioning themselves to ride that wave of consumer spending, becoming the go-to for companies who want to make their products in India. If they can make it work, it's a pretty smart move. But what about their debt? Isn't their debt to equity ratio a little high? Could that come back to bite them if things don't go exactly as planned?
That's a really good point. Right now, their debt to equity ratio is 1.03, which means they're using a lot of debt to finance all this expansion. Some debt can be good, it can help a company grow faster, but too much debt can be dangerous, especially if their profits aren't as high as they hope.
Speaking of profits, let's get back to those integration costs. Are those just a temporary thing, or could they stick around and hurt their profitability for a while?
It's hard to say for sure. Integrating new businesses is always tricky, especially in a sector like footwear where Hindustan Foods doesn't have a ton of experience. They've got to manage the transition well, make their operations more efficient, and make sure everything goes smoothly with the previous owners.
Earlier you mentioned they were doing well in footwear, but isn't that market already super competitive? How are they going to set themselves apart from all the companies who are already there?
Oh, it's definitely a crowded market. There's no doubt about that. They'll have to use their manufacturing know-how, maybe offer better prices than the competition, or come up with some unique selling points to get customers interested. It all comes down to how well they execute and navigate this competitive landscape.
Sounds like their ability to execute is really important here. What should we be looking for in their next financial reports to see how their strategy is playing out?
We want to see their revenue continue to grow at a healthy rate, especially from these newer areas like footwear and beverages. If that happens, it'll be a good sign that their diversification strategy is working.
Yeah, because strong revenue growth means they're gaining market share and winning new customers. But what about profitability? That's the bottom line. When do you think those integration costs will start to ease up and their profit margins will start to improve?
Well, the company's management has said that profitability should be better in the second half of the year. That's when the shoe business should be more stable, and those new projects we talked about should start bringing in some money. Look for an upward trend in their gross profit margins and EBITDA. Those are good indicators.
Okay, we'll keep an eye out for that.
Mhm.
And what about their cash flow? You mentioned before that it was strong, but they're going to need to keep that cash coming in with all this expansion, right?
Absolutely. Healthy cash flow is crucial for any company that's growing as fast as Hindustan Foods. They need to manage their working capital well. That means keeping a close eye on their inventory and how quickly they're collecting money from customers.
Yeah.
If they do that, they'll have the money they need to keep growing.
So there's a lot happening here. It'll be interesting to see how Hindustan Foods handles all these challenges and opportunities.
Yeah, definitely. They're a great example of a company going for ambitious growth and strategic diversification. Whether they hit those targets or run into trouble will depend on how well they execute and how well they adapt to this constantly changing market.
Hindustan Foods is a company we'll definitely be keeping tabs on. We haven't even touched on their move into the color cosmetics market yet. That's a whole other layer to their diversification plan.
That's right. Jumping into color cosmetics is a huge change for a company known for making food and beverages. It's a big bet on this rapidly growing part of India's consumer market.
That's what makes these deep dives so great. We get to uncover these surprising twists and turns in a company's story. Let's explore this cosmetics thing a little more. What made them decide to try their luck in such a different industry?
Like we talked about earlier, India's consumer market is exploding, and the demand for beauty and personal care products is through the roof. This is driven by a young population that has more and more money to spend. Hindustan Foods sees this as a golden opportunity to use their manufacturing skills in a high-growth sector.
So they're not just chasing any random opportunity, they're thinking strategically and trying to align themselves with these new consumer trends. But how does their contract manufacturing model, which has worked so well for food and beverages, translate to the world of lipstick and eyeshadow?
That's the big question, isn't it? The beauty industry is really demanding. Trends change all the time, and customers expect top-notch products. Hindustan Foods is going to have to be very agile and responsive to keep up.
It sounds like it takes a lot more than just making the products. They have to stay ahead of the curve and really understand this specific market.
You got it. They're going to need to build strong relationships with cosmetics brands, figure out exactly what they need, and guarantee consistent quality and on-time delivery. It's a whole different game compared to making ice cream or bottled water.
Right, the stakes are higher in this market.
Yeah.
But hasn't Hindustan Foods shown that they can adapt to different industries? They made a successful move into footwear, which was completely new territory for them. That makes me think they're not afraid of a challenge.
True, they have shown a willingness to learn and adapt. But the beauty market is particularly tough and competitive. To succeed, they're going to have to bring their A game.
So it all comes down to execution again. They've got the vision, the resources, and a history of adapting. The question is, can they actually deliver in a market like beauty?
That's what we're all waiting to see. Keep an eye on how they talk about their color cosmetics business in their upcoming earnings calls. Are they winning contracts? Are they partnering with good brands? Are they hitting their production targets? Those are all key signs to watch for.
Sounds like there's a lot to keep track of with this company. They're growing fast, diversifying their portfolio, and making some big bets on India's consumer market.
Yeah, it's a really interesting story of ambition and calculated risk-taking.
Definitely. But we haven't even gotten to the most interesting part yet.
What's that?
I'm just thinking about this whole color cosmetics thing. They're really going all in on a totally different market. It's kind of wild. What made them take that leap?
Well, you remember we talked about how India's consumer market is booming. That demand for beauty and personal care products, especially from younger people, it's going through the roof. Hindustan Foods sees this as a huge opportunity to use their manufacturing experience in a sector that's growing really fast.
But they're not just grabbing at any chance they get. They're being smart, trying to line themselves up with these new consumer trends. Okay, that makes sense. But their expertise is food and drinks. I mean, do they really know anything about lipstick and eyeshadow?
That's a fair point. The beauty industry, it's famous for being really unpredictable, with trends changing constantly and people expecting top quality, innovative products. Hindustan Foods is going to have to be really quick on their feet and adaptable to succeed here.
So it's a lot more than just making this stuff. They have to stay ahead of the game and really understand this particular market inside and out.
Absolutely. They need to build strong connections with those cosmetics brands, figure out what they need, and make sure the quality is always there and the deliveries are on time. It's a whole different world compared to making ice cream or bottled water.
It sounds like the stakes are way higher in this market. But wait a minute, hasn't Hindustan Foods already proven that they can adjust to different industries? They did a good job with footwear, which was completely new to them.
Yeah.
I think that shows they're not afraid of a challenge.
You're right, they have. They've definitely shown they're willing to learn and adapt. But the beauty market, it's especially tough and competitive. If they want to make it there, they got to bring their A game.
So everything comes back to how well they execute. They have the vision, the money, and a track record of being adaptable. But can they really deliver in a market as demanding as beauty?
That's the million-dollar question, isn't it? And that's something you, as someone who's clearly interested in Hindustan Foods, should be watching closely. Pay attention to how they talk about their color cosmetics business during those earnings calls. Are they landing contracts? Are they teaming up with good brands? Are they hitting their production goals? Those are the real clues to watch out for.
Wow, it sounds like there's a lot to keep an eye on with this company. They're growing like crazy, spreading out their portfolio, and making some pretty big bets on India's consumer market.
Yeah, it's a pretty fascinating story, full of ambition and strategic risks.
Definitely. So for anyone listening who's now as intrigued by Hindustan Foods as we are, here's something to think about. India's consumer market, it's incredibly diverse and complex. Will Hindustan Foods' approach of doing a little bit of everything be a good thing? Will it let them cater to all sorts of different consumer needs? Or will it spread them too thin and stop them from really excelling in any one area? It's something to ponder.
That's the real question, isn't it? It gets to the heart of their strategy, the choices they're making, and the trade-offs involved. We'll have to wait and see how it all plays out, but it's going to be a really interesting story to follow.
Absolutely. And that's what we love doing here at The Deep Dive, uncovering these fascinating stories behind the numbers and giving you the insights you need to make sense of the business world. Thanks for joining us on this deep dive into Hindustan Foods Ltd. It's been a pleasure having you.
It was great being here.
And until next time, keep exploring, keep learning, and keep diving deep.